All right, let's do this. How to make FU money trading stocks and Bitcoin, including cryptocurrencies. And yes, I have to talk like this, otherwise the automatic system will flag this video just for talking about Bitcoin and cryptocurrencies. I'm not kidding you. Here's the list we're gonna cover. There are a total of 9 pro tips on how to make FU money so you can retire in a couple of years. That's actually how most millionaires do it. Do you realize that? Most millionaires, if you talk to them, they'll say, oh, it took me 20 years to do this and I accomplished this. Bullshit. They made all that money, in about a year and a half. The most amount of money they ever made was made in about a year and a half. The rest of it, actually, the most amount of money they ever made might have even been made in one day. Might have been made in one signing of one contract. Might have been made in just one buying of one thing. It doesn't take 20 years, 30 years to make millions of dollars. That was in the 1800s. Come on, guys. Sure, it sounds romantic for me to say, well, I slaved away for 20 years to build this empire of mine. But in reality, there is a moment for everything, and if you grab that moment, if you know how to capitalize on that moment, when that window is slightly open, you sneak through like a cat, you're done. You've just got yourself FU money. So here are the 9 pro tips on how multimillionaires did it. And it's not just pro tips. Saying it's pro tips is like, it's condescending, it's demeaning to this list. They're secrets, they're trading secrets that I'm about to tell you in this episode. Largely, these are the points that are covered. Risk management, macroeconomics, the difference between investing, scalping, and swing trading, and day trading for that matter. Leverage, how to use it. Whales, how whales trade and why you need to know. Setups, how do you actually set up a trade, whether it's just a spot trade or whether it's a leveraged trade. And pump anatomy. What happens during a pump? You notice that most pumps just go up and then wick right back down, or go down and then wick right back up. Why is that? How to use them, how to take advantage of those wicks. Now, at this point, you should have a notepad. You should put this video on pause if you don't have a notepad and take notes on this, because you're gonna wanna post this up, turn this into your desktop background wallpaper, whatever you have to do. Put it in front of your eyes all the time so that it seeps into your blood, it seeps into your synapses, and it seeps into your bone marrow. That's how familiar you have to be with this kind of data, this level of strategy. Okay, so let's talk number 1. Risk management. Always pull equity. Always, always, always pull your equity out of a trade. Pull your initial investment out of a trade. Well, if I do that, then I won't be able to make as much money. You'll make far more money because you'll actually have more bullets. You'll actually have more firepower, because especially in the beginning, you're gonna fuck up. You're gonna make tons of mistakes, whether it's trading stocks or Bitcoin or any of the other cryptocurrencies that I'm not allowed to talk about because I'll get flagged in this video on this platform. Okay, have you ever looked at a chart? Have you ever really just stared at a chart? You know, charts are basically really simple, right? On the bottom, it tells you the time. On the top, on the side, on the right, it tells you the price. Okay, so you look over time, the price goes up and down. Over time, the price goes up and down. Okay, I got that. Have you ever analyzed that chart? Well, how do you analyze the chart? The most important thing to basically analyze without understanding any TA, and we're not even gonna touch TA here because it's a totally different concept, and you can do all this without knowing TA. You can make millions of dollars without knowing TA. There, I've said it, okay? So let's skip over TA for now. The most important point for you to know about risk management and charts is volatility. That's it. In the stock market, there's even a thing called VIX, which is the volatility index. What that means is every hour or every day, there's a certain amount of plus and minus, and it's just about always the same. So it's totally predictable. It's totally predictable. If you can predict how your girlfriend's gonna feel one moment to the next, how much more often would you get laid? Being able to predict the future is money. Being able to predict the future is your secret to accomplishing anything and getting ahead of everybody else, if you're gonna compare yourself to anybody, which is stupid anyway. But always pull your equity out of a trade, and you do that by understanding and measuring the VIX. Volatility index of any coin or cryptocurrency, or Bitcoin itself, including stocks, means that you look at the chart and say, hey, at any given point, just throw a dart at the chart and say, hey, right now this is $72. And then, oh, that's weird. 3 days later, it's $72 again. Oh, that's weird. I throw another dart and it's $61, and 3 days later, it's $61 again. So what you've got is, you've got a formula. Every 3 days, price generally returns to wherever it's been. In the case of Palantir, it took about a month and a half. In the case of GameStop, it took about a week. You can take any, I'm not kidding, you can take any point on the chart and just throw a dart at that price and just count the number of days. Price returns right back down to wherever you bought or wherever you sold. What does that mean? That means that gives you an opportunity to pull your initial investment out. It gets your equity out of the game so that you're not in danger of losing your nest egg, your savings. What that means is you buy something because for some reason you think it's going to go up, and normally it's because of TA or some kind of macroeconomic fundamental analysis reason says this thing's going to pump. You know for a fact that this thing's going to pump. You buy it and then you look at the volatility and say, well, historically this thing always returns right back to its price around 3 days, which means that day 1 and day 2 it's going to keep going up. That's all you have to do is just averages. It's just the law of averages. And that's simple math. It's not complicated technical analysis math. It's not moving or exponential moving averages. It's not parabolas. It's not sine waves. It's not any of that. It's not even harmonics like that's on this screen. It's the simplest thing in the world to do. So what you do is measure how much time you have before it returns or before it starts its arc down. Yeah, you've heard of half-life, right? Same thing. Everything has a half-life. Nuclear radiation, radioactive plutonium has a half-life. Figure out where the peak, where the apex of that half-life is. Historically, you can just look at the chart, any chart, and do that, and that's when you pull your money out. Well, what price should it be? What percent should it be? It's different per item. It's really different per stock. It's different per coin. It's different per any, even at, there's no consonant in the beginning of, so I'm going to say metherium, itoin, ipple. They're all exactly the same, principally, but they act different from hour to hour to day, so all you have to do is find its own specific DNA VIX. Got it? That makes sense, right? I don't have to explain this any further. That's how you pull your equity out. Otherwise, you go to bed feeling rich, you wake up being poor. Have you had that happen to yourself? Don't let it happen to yourself anymore. But what if it keeps pumping? What if this is one of those rare instances where it just keeps pumping into outer space? I'm going to cover that too. That's point number, it's later down the line. Let's go into number 2. Know your macro. You have to understand macroeconomics. If you don't understand macroeconomics, and your econ teacher, don't worry, sucked, which is why you don't understand macroeconomics. There are largely 2 things you have to pay attention to. I don't care if you're in India. I don't care if you're in Tibet. You have to pay attention to the US dollar and the Chinese yen, Chinese yuan. Those are the 2 currencies you have to pay attention to, because when either one of those goes up, everybody just wants money. Everybody just wants cash. I don't care if you're a huge Bitcoin holder that you bought 10 years ago. When those 2 things go up, you want cash. So everyone starts cashing out to get these 2 things. Stocks too. Number 2 is yield. Yield on T-bills, yield on government debt. What is that? It's not that complicated. It sounds complicated because you might have never heard of T-bills or yield on T-bills or interest rates on T-bills, but it's really this. Super simple. Whenever a government wants to invest in their infrastructure, build more freeways, I don't know, give more hospital healthcare away, or even do a stimulus thing, $1,400 to everybody, guess what they do? They have to borrow money. Are you serious? Really? Governments have to borrow money? Yeah, governments borrow money from other governments to get all this money so that they can hand out checks for $1,400 to all their citizens. That's how they do it. Oh, why don't they just print more money? They can and they do, but if they print more money, what ends up happening is the Federal Reserve in America, oh man, this is getting a little deeper. I'm going to cut this short. Federal Reserve in America says, hey, we printed out $7 trillion. We need some kind of collateral for that $7 trillion. They do that. They don't just print out $7 trillion and say, well, and I'm sure inflation will pay us back. What they do is they say, hey, why don't you give us an assurance from Apple? Why don't you give us an assurance from Microsoft that those companies will pay us back because they have tons of cash? That's exactly how Japan, the Bank of Japan, ended up owning all the stocks in Japan. Bank of Japan is a central bank, just like the Federal Reserve is a central bank. And when the Bank of Japan printed out tons and tons of yen for the Japanese, they said, we're giving you a ton of money, but you're not giving us anything back. So maybe just give us promises from all your major corporations. And the major corporations said, well, sure, if you give me $50 billion, I'm going to promise to pay you back $50 billion in 5 years. And 5 years later, they couldn't do it. So what did they do? Well, will you accept stock? Those are the macro factors you have to understand. Cash and yield, those are the main two macro factors. In fact, I have them up. Let me show you what they look like. Sure enough, look at that. Look at that. You see that? This is Bitcoin. This is Bitcoin, and this is US government bonds. Notice what's happening to US government bonds here? It's going down. So since US government interest rates are going down, hey, let's not give money to the US government. Instead, let's buy things. The opposite way, this is going up. Bitcoin goes up and government bond yields go down. Fascinating how that works, isn't it? So these are really all you really need. Oh, this is exciting. This thing really wants to pump right now. This is all of cryptocurrency total market cap. All coins are going up right now. Woohoo! You mean to tell me it's that easy to predict whether Bitcoin or stocks are going to go up or down just by looking at some weird chart that I've never even heard of called the 10-year yield, 10-year treasury yield? Why, yes. Isn't that weird? That's why the big guys, the multi-billionaire fund managers will never tell you that because they don't want any competition for the same dollar. Okay? Moving on, number 3. We're only on number 3. I'm going to make this fast. If you're swinging long, you want to scalp short. If you swing long, in general, you want to scalp short because you generally never get the exact bottom, and you generally never get the exact top. So if you think for a fact that, hey, this is top, and you sell everything, at least do a small scalp long with leverage, 5x, 10x leverage, and then close it. Just get that extra little bit at the top. Or if you're going to go long and you think, hey, this is bottom. I mean, Bitcoin or this stock or that stock has been falling for 3 days straight. So this has got to be a bottom. I'm going to long this thing. Guess what? It's probably not the bottom. So do a short at the same time and put endpoints on it. Just say, hey, 10x short, I'm going to kill this thing. I'm going to take all my profits if it falls. Just 2 more percent. 2 more percent at 10x short. That's 20% profit, 20 extra percent profit. Make it a habit. If you're not absolutely sure this is absolute bottom and you're long for a swing trade, then scalp short. Number 4, since we're talking about leverage and since we're talking about scalping and swinging, let's talk about leverage. Do you understand how leverage works? You must use leverage. You've got to absolutely use leverage. There's nobody on this planet that made a ton of money, that got a really hot chick, that became super buff and became a UFC champion that didn't use leverage. Whenever someone excels at anything, they've used leverage. Even something as simple as romance, you use leverage. You go and get a haircut to make yourself look better. That's leverage. You go and talk to your dream girl or your dream guy's sister or brother and make them like you. That's leverage. When Bitcoin is going to go up, or this stock is for sure going up, like Palantir. Palantir is a deadly stock because it is the sleeper. It is the only company that is competing with Google. It's the only company that's competing with Google in this entire planet, and nobody knows that Palantir is actually a Google competitor because they don't have a website for the public. What does that mean? What would happen if they actually unveiled a public-facing website? Maybe it's called Palin, or maybe it's called Lantier or something. You just go to lantier.com and it's artificial intelligence. Before, you notice how Google, when you type in what is, or if you type in, I don't know, some person's name, it auto-completes and gives you a whole long list of things that people search for. Like you type in Itcoin, it'll take you to Itcoin price today. Or you type in a celebrity name and it'll say that celebrity name scandal, celebrity name nudes, celebrity name whatever it is. That's predictive typing. It's not artificial intelligence. Palantir, it'll make a website. You go to it, it already knows what you're going to search for. Palantir, you're sitting there on your on your computer and it pulls up Palantir or Lantier.com for you because it already knows that you're going to pull up Lantier.com. Whatever. Artificial intelligence, it's going to do that. Use leverage. Even if it's something as simple as just taking out a loan from a bank, because that's fantastic. You only pay 3% a year. Oh my God. The leverage that you have to pay on BitMEX, Binance, Huobi, it's 0.1%, 0.2%. Wait, isn't 0.1% or 0.2% way better than 3%? Yeah, it's 30 times less. 0.1% is 30 times less than 3%. So that's super cheap. Per 8 freaking hours, dude. 8 hours. Every 8 hours you have to pay 0.1%, 0.3%. I would rather pay 3% for a whole year than pay 0.1% every 8 hours. Now that's compound interest too. So not only are you paying 0.1%, 0.1%, 0.1%, meaning 24 hours, 8 hours, 8 hours, 8 hours equals 24 hours. You're not just paying 0.3%. You're paying about 0.42%. You're almost paying 0.5% in the whole day. You hold on to a long or a short, depending on what the funding rate is for longs and shorts, for a day or two, you're already down 1 or 2%. Imagine losing 1 or 2% of your money per day. I would rather take out a loan. Hell, the best thing to do is just sell your car. Sell your car and buy whatever stock you think, like Palantir. That's using leverage, okay? More in depth on leverage, the way it works is if you can't borrow money from a bank, which is the best thing to do, and you actually want to borrow money from Binance or from Huobi or from, I don't know, ItX. I already said the whole word, didn't I? I hope I don't get flagged. Anyway, I'm just gonna power through this. Then you should know that if you borrow 10 times your money, you have a margin of error of 10%. Because your equity is only 10% of the money that you borrowed. So if you have $10 and you borrow $100 to trade with, how much of that $100 do you actually own? Well, I only own 10%, right? You only own 10% of that $100. So what happens if what you bought falls by 10%? Well, you've lost about $10 worth of that entire chunk that you're trading with, and I just got an alert on my phone. That is exactly the amount of equity that you have, so bam, you get liquidated. If you do a 2x long, you have 50% equity. So let's say you had $10 and you borrow another $10. Well, it's 50-50, right? Half and half. So you can afford to lose 50% of the value on that particular trade before your equity, before your, I'm forgetting the word. What is the word for when you go into a pawn shop and you borrow money by giving them something, collateral, before your collateral gets confiscated? Understand that ratio, and then understand that it's not that sweet, because every single 8 hours, you get less and less equity. You get less and less margin room. So in reality, on day one, if you borrow 10 times your money, you have a margin of error of only about 9%. On day 2, you have got a margin of error of only about 8%. On day 3, you've got a margin of error of about 6%. Well, whatever happened to 7%? Remember, it's compound interest. By day 5 or day 6, if you're still holding on to a long and you still haven't made profit, you're going to get liquidated. So just plan on being liquidated in about 5 or 6 days if you don't make money. So you've got to get in and you got to get out if you're borrowing money from ItX or Einance or OOB or whatever, or what else are there, the other leverage websites. Number 5, this is important. Know the whales. Know the whales. Know how whales work. Whales dump into strength and they buy into fear. Why? They have to. They have so much money that you're super lucky if you only have a couple $100 or a couple $1,000 or even a couple $100,000, because you can just buy whatever market price is right now. Let's say something is worth $1,000. Well, you can buy it for $1,000, and if you want to buy more, oh look, someone's selling more. I ran out of this stock or this oin that I wanted to buy at $1,000. So I still want to buy more, and guess what? It's $1,001, the next highest order. Cool. You have an almost negligible slippage. That's called slippage, when price changes based on how much volume you want to buy. Multi-millionaires, billionaires, and funds, hedge funds, fund managers, they have to buy $300 million worth of something. And if you look at this price at $10, there's only 2 shares that are for sale for $10. You go up $11 and now there's 13 shares. You go up $12 and now there's 500 shares. You go up to $13 and now there's 1,000 shares for sale. So even if market price says $10, this stock costs $10 right now, by the time you spend $1.5 million or $200 million, you're not paying $10 bucks for it. You're paying $13, $14, $15 for something just regular average Joes and mom and pops can just pay $10 for. Which is why whales buy slow. Which is why whales dump into strength. Which means if a whale, and here's the funny thing about you, if you made 5% profit, would you go screaming, I made it, I'm done, I have FU money? No, you wouldn't. 5% profit to you doesn't really mean much. Let's say you have $100,000, you made 5% profit. Oh my God. $5,000, what are you gonna do? Buy a Costco bike? Buy a Chinese-made bicycle? It's not worth much, 5%. A whale, however, if he's got 500, no, let's say he's got $1 billion and he makes 5% of his money in a week or 2. He's styling. He can buy a country. He can buy a private island with all sorts of private Learjets, all filled with beautiful stewardesses that aren't wearing anything under their skirts. I say that because I've actually seen that happen. I've actually been on a multi-billionaire's jet, and the flight attendants aren't wearing any. Anyway, another story. That's just how the other side lives. Too much reality for you? In other words, imagine a train, or have you ever seen those tractor trailers, really, really big guys that are trying to do a U-turn in a real tight 4-way street? They need a bunch of time. So all they can do, even if you want to hold until you make 10 times your money or 100 times your money, because everyone in EFI, BFI, this is too short. This needs to be a longer word so you know what I'm trying to refer to, has made 500 times their money buying END, which is, they changed the ticker to AV. Man, this is hard to do, obfuscating all the keyword terms, but I hope you know what I'm talking about. So you think, hey, I want to make 500 times my money too, and you hold, but you get shaken out every single time something dumps 30% or 40%. That's just the whale saying, hey, I'm happy with my 5% profit. And it's going to happen. It's going to happen, so just deal with it. Or predict it. That's even better. So when you make 40% profit, know that it's going to dump 10%. Sell after 40% profit. Yeah, but the news, the media, everyone's saying right now it's the biggest thing and everything's like going off right now, everything's pumping and everyone's euphoric right now. That is point number 6. The whales use the media. If you're a multi-billionaire, you don't think you have a couple news anchors or a couple CNBC people or guys like Peter Schiff on your payroll? You pay guys like this. Did you know that even Twitter guys on Twitter, get paid by corporations on the down low? They just get paid thousands of dollars to shill stuff. Hey, this is the greatest new OIN. It's a fantastic new cryptocurrency project. This is a fantastic stock, except they don't do this with stocks as much because you'll go to jail. It's true. The media is owned by the people that have the money. So when the people that have the money buy out all the media talking heads that say buy this, buy that, is when whales are going to sell. Which is probably when you should sell too. See how that works? They use you to dump into. They use your money as exit collateral. This is important. Actual physical setups on how to set up a trade. If you're doing 5 to 10x leverage, and I rarely ever share this. Never market buy. Never market buy. Always put your order right at about 0.5% to 0.7% underneath market price, because there's always going to be somebody that gets liquidated, which causes price to go boop, boop. That's what happens. Sometimes it's whales buying a bunch or whales selling a bunch, but normally what ends up happening is whenever there's a liquidation, and there's always a liquidation before big pumps or big dumps, price goes boop, boop, and that boop, boop is what you want to get sucked into. So if you buy at market price, you're already going to be negative. Especially at 10x leverage. You go down 1% at 10x leverage, you've already lost 10% of your money. You've lost 10% of your money. So don't do it. Just 90% of the time, if you set an order 0.7% underneath price, it will get executed. Then, just in case the TA is wrong, well, I don't know how to do TA. Let me deal with that in a second. Just in case the TA is wrong, or there's more fluctuations, or there's more slippage, put more orders at 2.2% on most cryptocurrencies, especially Bitcoin, because that is the VIX for Bitcoin and high market cap cryptocurrencies. For stocks, it's a little different. It's case by case on stocks, depending on volume, volatility, and a whole bunch of other factors. Market cap, what the hell is that? I'm gonna get to that, hold on a second. And finally, 3.8%. 3.8% is my lowball offer. 3.8%, putting orders at 3.8% under market price for longs and 3.8% above market price for shorts is saying, I'm gonna safeguard that money. I know it's not gonna get executed. It's just gonna sit there for me. And that's fine. And that's totally fine. There are very, very few cases where you want to go all in anyways. Very, very few cases. Perfect, almost horizontal head and shoulders, inverse head and shoulders. Yeah, all in is pretty safe. But even head and shoulders, after it makes its boink, 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 if there's a bounce, how high will it bounce? It'll bounce high enough to liquidate all the people shorting before it actually dumps. That's what that 3.8% is for. So that means that if I'm putting in orders, only some of my orders will get executed, yes. Very few instances will you have all your money go all the way and make you extraordinary money. Sometimes it does, but the one time it doesn't, the one time you're all in and it doesn't go the way you expect it to, you're wiped out. And you've got to be able to survive, right? Which is why you do, are you taking notes? You are taking notes, right? 0.7%, 2.2%, 3.8%. This is specifically based on the VIX of Bitcoin. You want to use those numbers precisely. Don't fudge it and don't say, hey, I can do better by doing 3.7% instead of 3.8. Just don't. get used to stink bids. That was number 7. Number 8, always close, always short every mega pump, every pump. Why? Well, what if it keeps going up? That's the biggest concern everyone has, right? Well, what if it keeps going up? Remember whales. Remember how whales work. Whales have so much money that if something is $10, well, by the time they're done buying, just by buying alone, it's like, I don't know, let's say some super rich guy moved into your neighborhood and bought the house next to yours, and then the neighbors found out that he bought the house across the street, and he's still buying more houses. What are the neighbors gonna do? You think they're gonna keep their house listed at the same price? No, this super rich guy is buying every house in the neighborhood. The next guy to sell, he's gonna raise his price. And if he gets sold for that price, the next guy that didn't get sold, he's gonna raise his price even more. That's bidding, that's what happens. That's why price goes up, and when the whale is done buying, doof, it dumps all over again. You know how long that takes? That takes about 20 seconds. That takes about 20 seconds. 20 seconds is all you have. You'll see this big green thing, whoop, and you go, yes, Mom, look. I have a 10x long, and now I've got 22% profit. Yee. Holy shit, it dumped. I'm liquidated. That's what happens. You want to close on every single pump. Yeah, but what if it's that mega pump? What if it's that pump that makes everything go up 300%? The funny thing about those pumps, those pumps happen so quick that by the time you closed it, you've already made 300%. What I'm telling you is that a pump that goes up 2%, a pump that goes up 5%, a pump that goes up 15%, a pump that goes up 300%, all happens in the same amount of time. So, by the time you open your cell phone, by the time you open your phone and you hit close, whether it went up 5% or 500%, they both happened in the same amount of time that it took for you to close that long or close that short. Why is that? Why is that? But what about those exceptions? I've seen Itoin, or I've seen Palantir, or even GameStop pump for 2-3 days in a row. Let me deal with that in another point. The reason why these pumps, 3% or 30% or 300% pumps, all happen, poof, 16 seconds, 17 seconds, 18 seconds, now boom, all die within 20 seconds or so. It's because that is exactly the amount of time that it took you to close that long, is exactly the same amount of time it takes anybody else to pull out their phone and get an alert that says, hey, something is pumping. Holy shit, it's finally going up. Buy, 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 buy. All the sheep, all the lemmings will see a green candle or a red one and do exactly the same thing. If they see something falling, they'll sell. If they see something pumping, they'll buy. And they use whales. Number 6, actually number 5 is know the whales. Whales will use this amount of pressure to sell. So what they're doing is they're saying, whales will pump something and they'll go, okay, all right, Chad, ready? Get ready with that red button. Get ready to push that red button. Yeah, and whales have really, really complicated analysis software, and they've got data feeds coming from Verizon. They've got data feeds coming from SK Telecom. They've got data feeds coming from all over, every cellular company and every internet company that says, all of a sudden, Robinhood users have logged in 300,000% more than average. They actually get this data. Whales get this data that say, we have a sudden spike in Robinhood users. And then they'll look at the chart and say, well, we're up to 43% of Robinhood users just logged on. Wait. We're up to 53%. Wait. We're up to 57% of Robinhood users. Wait just a little. We're up to 62% of all Robinhood users have just logged on. Dump it now, is what they do. That's just what whales do. Which is why, and that's exactly that 20-second rule is the same. You want to count it? Beep, 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 beep. Oh, 1, 1,000, 2, 1,000, 3, 1,000, 4, 1,000, 5, 1,000, 6, 1,000, 7, 1,000. Pull up Robinhood, log in, password, this 8, 9, 10, 1,000, 11, 14, 1,000, 15. Okay, pull up the screen, go to that stuff. Holy shit, it did go up. Okay, I'm gonna buy 17, 1,000, 18, 1,000. I bought. Dump. That's why it's 18 seconds. That's why it's about 18, 19 seconds. I gotta plug my phone in, hold on. Okay, finally, point number 9. So, okay, before we go to point 9, I suppose we should address this. Well, what about those mega pumps that just go on for days? Refer to number 1. You took notes, right? You remember what number 1 is. Just refer to number 1. Number 9. A stop loss is a stop gain. That's all it is. A stop loss is saying, I'm moving out of this market. I took a little bit of loss. I didn't think it would dump, but it did. So I'm out. I'm out. Funny thing about this is, this is the opposite of number 8. Number 8 says, whenever there's a pump, and you've got 10% or 15% profit, I mean, god damn it, guys. Seriously, I mean, how many more expletives can I use to just drive this home? Let it sink into your head. A savings account pays you 2% interest a year, 1.2% interest a year, guys. If you make 1.2% profit a day, you compound that, pretty soon you're a billionaire. Compound interest, even just do 5% profit twice a day on $1,000. Everybody has Google Sheets, right? Everybody has Excel. Just do it. Do $100 and do 5% profit twice a day for a year. You end up being a trillionaire in like a couple months or something. It's insane how compound interest works. So everybody, the way everybody is, they make 10%, which is a hell of a lot more than what your bank gives you on interest in your savings account or even the certificate of deposit. They make 10% and they go, ha ha ha, hey look girlfriend, I'm rich. And then suddenly dump. So when something pumps 10%, you don't take the profit. But when something dumps 10%, you take the loss? Huh? Huh? I'm not going to talk about that anymore. I think I've made that point clear, right? I'm going to give you a bonus one. And we're going to talk about TA for just a minute, okay? Bonuses, you have to focus on market cap. Whether it's a stock or it's a cryptocurrency, always compare, never compare the price. Never compare the price. Well, DOT is $100, whereas Uskama is $12. So I'm going to buy Uskama instead of DOT because it's cheaper. Or IPL. IPL is what, however many dollars it is. It's one of the cheapest in OinAce. Use market cap. Don't use price. Why? Because the price, the only thing that standardizes the price is the market cap. In other words, would you rather buy, let's say you have $10. Would you rather buy this box of apples or this box of oranges for $10? Which one's the better buy? Well, I don't remember how much one orange costs versus one apple, so I can't make that. Immaterial, because the price isn't going to be that different. Let's say an apple is 50 cents and the orange is 70 cents. Big whoop. What you really should be asking is, how many freaking oranges and apples are in each box? That's market cap. In other words, let's say this stock is $100. This stock is $100, okay? And this stock is only $1. Which one's cheaper? You can't tell. You have to ask how many apples are in each box. In other words, how many shares are in each company? So this $100 share, let's say there's only 10 shares. 10 shares times $100, that's only $1,000 worth of shares. $1,000 worth of shares. But this $1 share, this $1 stock actually has 1 million shares. 1 million different people are holding $1 worth of this stock, how much is this company worth? This company is worth $1 million. You see what the difference is? Price, it can be a high price, but only have a super small circulation. It can be rare. That's what you want. You want to know price versus rarity, and that's market cap. Now that you've got all these 9 plus the bonus of you have to compare everything by market cap. You can't just, most of what we tell our secret private research and analysis members, we have a Telegram room where, and it's at itcoin-signals.org. Itcoin, you know it's not Itcoin, right? You have to spell it out. Itcoin-signals.org is where all of our premium subscribers, we have hedge fund managers, we have celebrities that join us in our private secret room to get our picks of what to buy and when and why now, and what to dump now is what we tell all our members. And that is based on TA, and that is based on macro. I showed you the chart. I showed you the chart on U.S. government treasury yields, and did I show you the U.S. dollar versus Chinese yuan chart? I don't think I did. Anyway, let's skip that. It's based on TA. TA is the only, and fundamentals, are the only last thing you really need to know to be able to make FU money. That's it. The other things, the other 9 things that we covered here on this list are digestible. You can do this on your own. The TA part and the FA, understanding trade agreements between countries, understanding what war in Yemen will do, understanding what Hyundai and Kia will do to Apple, and what that will do to trade pressure between China and America, and France, which has Renault will do to the price of your stock or your cryptocurrency. That is a bigger conversation that most people can't figure out within the length of one 43-minute YouTube video. It's a little bit more complex, and it requires a lot of experience, where you test your theory and you go, hey, Chinese yuan went up, Hyundai Motors did this, Apple's introducing a whole new line of this, and so I think the stock price of this, or Samsung's going to introduce a new wallet for these select, or PayPal. PayPal is now selling, you can go to paypal.com and they will actually sell you Ethereum and Itcoin and Itecoin and what else are they selling? Itcoin Ash. They're even selling Itcoin Ash. So you think, what else would they be selling soon? I'll give you a hint. One of the things they're going to sell soon is Reserve. It's too short. I was going to give you the ticker, but it's too short. I can't say what it is in abbreviated. Maybe I can use Pig Latin. SR Ray. Yeah, it's SR Ray. Is the next thing that PayPal is going to launch. And so stuff like this, and so SR Ray is going to pump super hard, mega hard, and its market cap right now, it's not even in the top 10. I think it's close to about 40 or 50. That's ridiculously ridiculously stupid cheap. Especially since it's overpowering Ipple. It's actually succeeding in doing what Rad Marlinghouse set out to do with Ipple, is being done by SR Ray. So, I mean, come on guys, it's pretty obvious that it's gonna pump, right? This level of analysis is not something that you can do easily on your own without a lot of experience. And that means a lot of failed trades, that means a lot of money loss. And that's not even touching TA. Technical analysis, you have to know all these patterns and all these, and then every single pattern has a fake out. You have to know RSI. You know how many indicators there are? Just get a trading view account. Even if you're not going to learn TA, get a trading view account and just count the number of indicators that are there. Hundreds and hundreds and hundreds of indicators. Go to DeMarc's website. They have even more complex indicators where every bar is numbered from 1 to 9. You're not going to learn TA. So don't plan on it. What you do in the case of TA, because you are going to have to know it, is rely on pros like us that know TA to get our charts that tell you exactly where to set your, this is point number 7, 0.7%, 2.2%, and 3.8% longs or shorts. You're going to need to be a member. But all the really big signals, all the really, really big ones are free on our Twitter. So you can join our Twitter at Uncle BFM. That's we've got 2 Twitter accounts that we use a lot, but use Uncle BFM. The other one contains the name Itoin, so I was going to tell you that one. It's got a, anyway. Just join Uncle BFM on on Twitter, and we'll tell you when something's going to make big moves. But even those big moves have these little boofs, and only our private community members get all the boofs. In public, we'll tell you, buy now, sell here. But everything in between, the boofs, you're going to have to be a itcoin-signals.org member. Woo! That was tough. What else do I need to tell you? Get rich.